Welcome to Copytraders Club, where you can learn how to make more money copy trading. I'm Gavin Macaulay, my name and username on eToro. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. It's that time of year, listener, and this wise man is following a star in the east, a black star hovering over the holy city of Singapore. Here we go. Episode 49 of Copytraders Club, and behold, a newly anointed king is among us. I come bearing the gift of mirth. Verily I say unto thee, it is new black star PI FundManagerZech, who has growing multitudes of devotees. Let's find out if he is the Messiah, or just a very naughty boy. Zech, hello. Welcome to Copytraders Club.
Hi, thanks Gavin for having me.
We're thrilled to have you here, and as a keen listener of the show, I know you know the whole thing about Quickfire Questions. Ready for those?
Yes, I do. I'm ready for that.
Username on eToro.
FundManagerZech.
Did you join eToro?
April 2016.
Did you become a popular investor?
Around July or August 2016.
Year of birth?
1987.
Place of residence?
Singapore.
Profession?
Investment Director, Asset Management.
Briefly state what you aim to achieve on eToro.
I want to inspire a better way to do finance.
Name one of your investing heroes.
Edward Thorpe.
Name one of your favorite investing books.
Anti-Fragile by Nassim Taleb.
That completes the formalities. The inner sanctum that is the Copytraders Lounge awaits you. Zechariah Bin Zheng, aka FundManagerZech, are you ready for this magical transition?
Absolutely, I'm so excited.
Zech, here we are now in the Copytraders Lounge. As a long-time listener to the show, it must be quite a special moment for you to finally be here.
Oh my gosh, I can't believe I'm sitting in the chair where Jay Nemesis and Eloise and all those people are sat. This is fantastic.
It is indeed fantastic. And you're normally sitting in Singapore, where you live, right?
Yeah, that's right.
And you're part of B's 84's gang of Singaporean-based PIs.
Yeah, that's right.
Along with Simone Rosetto, Amar Singh, and Maverick Go, to name a few. Have you met those guys in real life?
I met Amar and Simone once for drinks. It was lame because they didn't drink. I'm going to call them out on that. Stephen, I've actually not met in person because of COVID restrictions. So Singapore, we would cut down to 2 people, so we couldn't really meet. But yeah, I just met those 2 guys.
I'm sure you're looking forward to approaching the approachable investor.
Yeah. I wonder if you ever have me on his YouTube channel. I'm going to call him out on that.
So your full name, Zechariah Bin Zheng, suggests obviously Chinese.
Yep, that's right.
But what's the presence of Bin represent? Is that a Malay inclusion?
No. Okay, so it's interesting because my dad, he thought that it would be easier to just give me 2 names. So he just gave me the name Zheng and Bing. That was my birth name. But what happened was when I was growing up, everyone thought I was from China. And because it's a very common thing to have 2 names in China. But myself, I can't really speak Chinese that well. So it's kind of awkward to have people think you're from China, but not being able to speak Chinese. So I had to get an English name that not many Chinese people would kind of get. So Zechariah just came about after that. And I'm a Christian, so it kind of works out. I got it put into my birth certificate, not birth certificate, but baptism certificate and my national ID. So that's kind of my name now.
Yeah, I was a bit disappointed I didn't get to flex my Chinese language skills at the start.
Sorry, man, wrong person.
All right, so let's talk about how I came across you. The first time I ever saw you was on, by far, your most watched YouTube video. Number one reason copiers won't make money on eToro.
Okay.
Quite a good while ago.
Yes.
And we'll talk about that in detail later.
Sure.
But in that video, there's a couple of things I'd like to talk about that you mentioned. One of them is dyslexia.
Yep.
Tell us about that.
So I'm dyslexic, meaning that it's difficult for me to read very long sentences. It tires me out. So a regular person can take like 20 minutes to read something. It'll take me maybe 40, maybe 50. And I'm always very tired after reading. So it's a problem. It's something you learn to cope with. But I've had it since young. And it's also one of the reasons my Chinese is terrible. I know people think that's an excuse, but it kind of is. Because Chinese characters are really pictures, and it's really hard for us to kind of memorize that. But yeah, I've had it since young, and it's just something you kind of live with.
How does that impact your investing research? Do you listen to earnings calls rather than read transcripts and things like that?
So what I do is I listen as much as I can. It's text to speech most of the time. I say I read a lot, and I do, as in I go through a lot of audiobooks. On my reader, I have an open dyslexic thing, so it helps change the font to a different type of font. It's easier to read. And yeah, things like that. So I've learned to cope with it somewhat. And investing, I think that you just learn to cope with it. What dyslexic people are known for is kind of a big picture thinking. So that's kind of why I'm also a bit more drawn to macro ideas. It's a bit more big picture, a bit more, top-down approach. And I guess it's just a personality thing as well.
And does it inform your ability with numbers, or is that completely separate?
I think it's completely separate because, I did accounting and stuff like that, but it doesn't really affect us that too much, I guess.
Okay, also in the comments to that video that I mentioned, you say, my full-time job involves crypto. Are you still doing that job?
Yes, I am. I'm an investment director at a crypto asset manager.
Tell us about that.
So I can't talk too much about the strategies on that because that's kind of proprietary. But what we do is we do a lot of options, we do a lot of futures, so structured products. We do some DeFi and things like that. So it's a full setup. It's not as straightforward as people think. I think one of the major criticisms of eToro, and this is like general criticisms from the crypto community, is eToro spreads are very expensive. Crypto spreads are very expensive. And I think the reason for that is it's very difficult. If people are not in the crypto space, they don't understand how difficult or expensive it is to maintain that kind of infrastructure. But at our fund, we have to do a proper setup because we are licensed and things like that. So we have all that infrastructure, and it's not that cheap to run. We run a lot of strategies based around cryptocurrency, but it's not exactly what I do on eToro. On eToro, you can only basically buy, and that's it. Buy or sell, long or short. In the fund that we're at, we can think about speculating on things like Vega, which is volatility. But I don't want to get too much into it. It'll get a bit technical,
Well, let's talk a little bit about the spreads on crypto on eToro.
Yeah.
I saw a conversation the other day. I'm not a crypto guy. I don't really understand the argument that they were having, these people, but one of them was breaking down the difference between eToro, where you only pay the spreads, and somewhere else like crypto.com or Binance, where there's all sorts of other fees associated.
Yeah.
And he was making the case that if you audit fully both alternatives, eToro is not, in fact, significantly more expensive than the others.
That could be true. I mean, I would need to do my own research on that to find out for sure. But it's possible. I guess at smaller amounts, it is possible. But not the larger amounts. At larger amounts, it's hard because even as market makers, if you are the top tier, they actually pay you to trade. they don't take a spread, it's a reverse spread.
Okay. So that's your job.
Yep.
That leads to the obvious question of what proportion of your time is spent on eToro?
A lot of my time is spent on eToro. I took this job as well because it's more flexible hours than my previous job. My previous job was really, really tiring. This one is a bit more flexible in the sense that I do have a day off a week, so I can spend more time on eToro. That does help me. And of course, it's less intense. My previous job, I was doing a lot of other things as well, management, coming up with new products, chasing targets, things like that. So it was a lot. Now it's a lot less, I have to admit. But it's good, you know, 'cause I've had more time to focus on eToro, which is, I mean, I still believe I'm way too early to be a popular investor, but I'm very thankful for the opportunity. So I'll spend more time on it.
When you say your job gives you one day off a week, do you mean in addition to the weekend?
Yeah, and in addition to the weekend, that's right.
I had a vision of you being some hardworking Singaporean guy who is delighted to have one of the 7 days off a week to focus on eToro.
Yeah, when I was at the bank, it was pretty much like that, you know, 7 days a week.
Is any of that likely to change now that you're into the big bucks as a PI, as a newly crowned black star?
So I am of the opinion that I'm still too early because I only have about 6 years of track record. I believe to really be able to try and do what my mission is, I would need at least 10 years, maybe 15. And yeah, I'm going to work towards that, and whatever helps the mission grow as fast as to get to that end point, I would do. So I think having a job at this point in time still makes the most sense. Can I elaborate a little bit on that?
Ah, sure.
Yeah, so I was actually a popular investor back in 2017. I was actually a red star. I was going to go to green. But what happened was that was during the crypto boom, right? Everybody bought crypto. Everybody was making like 200%. I had my FX and I was only getting 20%. So I was a joke. I was a literal joke. And I was trying to do eToro full time back then. What I learned is that if you're trying to do eToro full time and you're depending on it for a paycheck, you can take risks that are a bit too risky because you're trying to chase returns in a market that is maybe not your specialty. And without having a safety net, without having a proper full-time job, I was very tempted to just take risks that I didn't understand. And I think one of the things that eToro is trying to address is this whole 2 and 20 fee structure, which the hedge funds have, right? 2 and 20 is a flawed system. I don't disagree because it can be expensive. But on the other hand, the 2% makes sure that the fund manager or whatever have you doesn't have to worry about his day-to-day.
Yeah, can you just explain for the listener what 2 and 20 is?
Oh, yeah, absolutely. So in typical fund management or hedge funds, they would charge a 2 and 20 fee structure, which is 2% of assets under management. So immediately, like the second you put money into the fund, they take away 2%. So you start with 98. And they take a 20% off whatever is made. So for example, if you make 10%, they will take 2%, meaning that you only get 8% back. But that's the general fee structure that the fund management industry uses. Again, it's coming down. There's a lot of compression. Some funds now charge 1 in 10. There's some 1 in 15. There are different ways that they do it, like high watermark and minimum bars and things like that. When I first got introduced in eToro, the structure they were trying to disrupt as much as possible was really this 2 and 20.
Yeah.
Yeah, the 2% just makes sure that the fund manager just doesn't take risks and he has to worry about going home to, having no income at all.
The poor fund manager. My heart goes out. He gets his 2% regardless of performance.
Yeah. I mean, you are right. There are flaws in the system, but 100%. But it's at least it's just a system, and without that, just based on performance, they would tend to chase, and you don't want that either. So there has to be a balance.
Okay, Zach, tell us something you're very bad at.
Oh my gosh, I don't know where to start. I'm terrible at emojis. Like I just had to ask my wife for help.
Terrible at emojis? That's the first thing that comes into your head?
Yeah, it was quite funny because I was asking my wife, like I was looking at different popular investors' bios. I was like, how are these characters in their bios? And I didn't know how to get them in, and I had to ask my wife to help me get the emojis into my bio.
Mm-hmm.
So that was kind of embarrassing. I'm a terrible singer. I think I'm a bad driver because I drive really slowly. I love jiu-jitsu, but I'm a terrible, terrible jiu-jitsu player. I just do it because I enjoy it, but I just get the crap beaten out of me all the time. Yeah, I'm terrible at a lot of things.
Well, that's kind of in keeping with your persona on eToro, interestingly.
Really? Yeah.
Yeah.
What is that?
Well, we'll come on to that later. For now, let's have a question from the art of people. Can you pick a number between 1 and 10?
I'm going to take 7.
If you weren't doing what you're doing today, what would you be doing and why?
If I had my ideal profession, it would probably be auditor. That's actually the first job that I wanted out of school. It's kind of boring, but that's kind of what I was striving towards when I just got out of school.
That's incredibly boring.
Incredibly boring.
Here's an opportunity for you to live your dreams in an alternate reality, and you choose auditor.
I'm a boring person, man. What can I say?
Okay, Zach, let's get into it a little bit here. Now, this is the bio section. But before I ask you to read anything, I'd like to preface it with the following. Your persona is one of a kind of a skeptic, a cynic. I have seen you say on an interview that you only want hard questions, so I get the feeling you like to be challenged. Now, Copytraders Club is usually a gentle, inviting arena with a few potentially tricky questions thrown in. But it sounds to me like you might want things turned up a notch or two. So, it might be fun if I was to play the role of devil's advocate and adopt an overtly and overly cynical approach to your bio. Are you okay with that?
Absolutely. Bring it on, man.
Okay. Right, well, let's kick it off then. If I ask you to open your profile. Yeah, if you could read your bio from the start down to before your link tree.
Okay, I am a member of Mensa. IQ more than 98% of the population. I have 3 years investment banking experience. I have more than 10 years of trading experience. I have a master's degree in finance, a bachelor's in accounting, a diploma in banking and finance, and a CISI level 3 and level 4. Just completed, by the way. And none of it matters. What I'm trying to do on eToro, the problem plaguing finance is trust, but I want to trade how I trade my life savings. I trade global macro ideas according to research and ideas.
Okay, so I'm in character now, Zach.
Go for it.
So none of it matters, eh?
Yes, none of it.
Now, I noticed that you repeat this list and even add a few more things that apparently don't matter at the start of your September update call. Well, I put it to you, Zach, that if none of your lists of qualifications and experience matter, then why not delete all that? If it doesn't matter, will you commit here on Copytraders Club to immediately deleting all that stuff off your bio?
Okay, I'll first of all tell you why it doesn't matter, then I'll go into why I actually did it if I didn't think it matters.
Okay.
So I think looking back at the history of finance, I think if you look at especially long-term capital management, LTCM, one of the biggest hedge funds that was ever assembled, it was headed by 2 Nobel laureates. People who is brilliant, absolutely brilliant, and they nearly caused a financial collapse. I don't think the amount of IQ matters, because if it did, they would be the most successful hedge fund that ever lived. But for whatever reason there is, They over-leveraged and they nearly caused a financial collapse. They had to be bailed out by the banks. If we go one step further, one of the most brilliant thinkers of our time, if you look at Sir Isaac Newton, even he got caught up in the South Sea bubble of 1700s. So no one is immune to the herd mentality that is finance. So I don't think IQ matters that much. I don't think qualifications matter too much because of those factors. But having said that, is it important to have a base understanding of finance? I think it is. Do you need to know how to code? No, definitely not. But do you need to know how to look at different data sets to arrive at the conclusion? Absolutely. Should you know a little bit of accounting? Should you know how people play with their books and things like that? Absolutely, you should know a little bit. And if you don't understand those things, I think it's going to be very hard for you to find opportunities in the market. It's not saying you can't, but I think it's harder. When we talk about structures of markets, which I think I'll get into later, and you don't understand the basics of the markets, it's going to be really tough for you.
Okay, that's a disappointingly good answer. But the cynic in me says, obviously it does matter, specifically to the creation of your image as someone who isn't like other PIs, but really knows what they're talking about. It matters because it is, in effect, your sales pitch. I have seen you say elsewhere, eToro's the antidote to the BS of the finance industry. And you quoted, I think, reading Money Master the Game, Tony Robbins. You also said, don't copy me, I'm no one special. I think these all come from the video you did with that Italian guy.
Right, yeah.
Pino?
Maybe.
Don't copy me, I'm no one special. So your carefully curated image is that of being the opposite of the smiling salesman. So this expression of existential nihilism, none of it matters, has resulted in you having a black star. Congratulations on that. So something in your approach is clearly working.
Yeah, I that's a very good criticism, and I'd love to hear the other side of that. But yeah, allow me to kind of tell you where I'm coming from in all of this. My first mentor was a great technical person. He was really good at finance. He graduated from an Ivy League in the US, and he took his master's there. So he's a brilliant man. And what happened was that he went into the fund management space, and purely because I sincerely believe this, purely because of market timing, it didn't turn out well. Purely that, and that is nothing you can do. There's nothing you can control. Especially when we talk about bonds and things like that. It's been a 30-year bull market, but if you run into one or two tough years, that's all you need. In fact, if you look at great economists that I follow, all the Austrian school economists, are any of them really well known? I would argue only in certain circles, because we all follow a different school of economics. But are they any less brilliant than anybody else? I don't think so. And they've really formed the way I've thought about finance and the way it works. So do I think I'm special in any way just because I happen to be where I am to do what I do? I don't think so, man. It's just a bunch of circumstances put together. If you change it a little bit, I'll no longer be who I am today. I can guarantee you if my crypto exposure was any less than it was last year, we would probably not be having this conversation. I would probably not be a black star. And going to next year, we'll never know what happens. I could have a down year and, I could just disappear off the face of eToro. Anything's possible. So do I think I'm special? Absolutely not.
Yeah, you forced me now to break character for a moment and say, maybe the cynic only has the luxury of saying that because you have been successful and you have scaled the ladder. If you were still a struggling red star, and even back then you were saying the same thing, it might seem much more genuine as a struggling red star to be saying all these things.
Right.
But only because of your success could the cynic turn it against you. So have I won you back? Are we still friends?
Yeah, no. It's good, man. It's good. No, I appreciate it because, yeah. So I appreciate people calling me out on my bullshit, and I'm not a perfect human being, and by no means. And I understand where you're coming from by saying that. But having said that, if you looked at the way that and I've not shared this before, I think it's interesting if I share it now. After I finished trying to do eToro full time, I went back into the banking world to find a job. And my one rule was that I wanted to continue to do eToro. But because of the types of jobs I was going after, because of regulations, I couldn't. But I made the intentional decision to sacrifice that. Unfortunately, I can say these things, but it's really hard to verify. Like, how are you going to verify any of this? But yeah, I made the intentional sacrifice to not go into certain areas and certain fields. I actually went for a banking interview and they said, did you leave your job to go and pursue this thing called eToro? I was like, yeah, I did. And it's like, the lady actually looked at me and said, wow, that's really stupid. They actually said that. And I think people don't realize that it's a very tough thing being a popular investor. Even if I was a red star till today, or even a blue star, it doesn't matter. It's very tough to put yourself out there and say, this is my portfolio, this is what I'm doing, these are my ideas. And I only have one shot at this. eToro doesn't allow you to create 5 different accounts. You only have one. If you catch the wrong market timing, you're a value investor during the wrong time, you can have terrible performance. Even Warren Buffett, if you look at his performance, there are stretches of time where he severely underperformed the market. But he is the Oracle of Omaha today because he stuck it out. And I believe that my style of investing will only really work over a 15-year period. That's always why I've maintained that I'm way too early to be a popular investor. But yeah, I understand the cynics out there who say, yeah, you can say that now, but I made a lot of sacrifices, and it's hard, man. It's really hard to kind of tell people what it is, because, yeah, how do I put it? It's a lot of weekends. It's a lot of hours. I mean, you do this podcast, you know, it takes a long time. People think it's easy to do. It's not. None of this is easy. And juggling a full-time job, juggling family, juggling the rest of everything that's going on, it's really tough, man.
You keep saying you feel like you're early to be a popular investor. You're not just a popular investor. You're already a black star. As I mentioned earlier, you're in a very small elite band.
Mm-hmm.
Do you feel like you don't deserve your place at that table?
I would say this. What I want to show the world is, or what I want to prove in the way that I trade is, when you talk about performance over an extremely long period of time, it is very, very difficult. Reason being is there's always cycles in the market. And we know this because of the work of people like Ray Dalio. We know this because of history. We know this because of all the greats that came before us. In 1920, everybody was all on about railroads. Within the next 10 years, they were no longer the hottest commodity. I don't think people remember this, but before the great financial crisis, everybody thought that banks were the only way to go and they were the best investment. Till today, I believe that everybody believes tech is the best way to go. Everybody believes in the growth story, and because of the cycle that we're in. But given 10 years from now, do I think tech will be still the 4 player in the world? The answer is definitely not. History has shown us that time and time again. But yet this story, I can't tell it to people because a lot of people get offended. A lot of people have made a lot of money over the last 10 years and they think this is the way to go and it'll continue to be for the next 30 years. And the answer is no. So the reason why I think I'm early is because if you're unable to adapt your style to see cycles, if you're unable to look at the world and say, and you call what is and is not the correct allocation of capital, I think you will not be able to stay for very, very long. Does that make sense?
Does make sense. And we're going to talk about it all later, actually, that very subject. For now, let's get back to me being nasty to you about your bio.
Sure, let's go for it.
I've never done a Mensa test. Not because I think I would score poorly. I might well score quite well. But the reason I don't do it is because A, I don't think such an amorphous, untetherable concept such as intelligence can be reduced to a single number. But mostly, B, I don't want to be one of those people who runs around telling everyone what their Mensa IQ result is. You know, I find that quite off-putting. If someone brings that up at a dinner party, they're out. What kind of person even does that? And what does it say about them that they wanted to?
Okay, so I told this story on my last investor call, and this was during the Q&A. So this I did not publish because, I wanted to respect everyone's privacy. But he later reached out to me and asked why I didn't publish this, but I'll tell it here anyway. This is new, so it hasn't been published anywhere. I took the IQ test only when I was 27 years old, so 7 years ago. On the day I got my results, I actually broke down and cried, like really badly. And the reason is I thought I was stupid my whole entire life. And people may laugh at that and say, what on earth, right? But going back to that part about being dyslexic, you have to remember that in Singapore, it's very tough. If you are dyslexic, it's very, very tough. About 12 years old, they start streaming you into different categories, right? And I streamed at basically the 50th percentile of academics. 50th percentile. How is that possible that you stream at the 50th percentile if you have an IQ of 98 percentile? And it's not lack of trying. I'm a very hard worker. As a kid, I was really hardworking. Till today, I'm really hardworking. I'm extremely driven, but I didn't do well. And really because I didn't know how to cope with my dyslexia, the teachers didn't know how to cope with my dyslexia. I didn't know what was going on, and I suffered, man. So when I got that, I grew up my entire school life thinking I was stupid. I was like, why am I studying harder than everybody else in this subject and not doing as well? So when I got the test, I broke down and cried, man. And this isn't a story that's new to dyslexic people. Dyslexic people will hear this and like, yeah, that's the story of my life. So it's not uncommon.
Wow, you're making me feel really bad now.
No, man, it's a common question.
I'm going to drop this cynical attack.
No, continue. I enjoy it.
Oh, well, that's a nice story. Okay. On your link tree, the third link is paid consultation call, which is a link to something called the Social Trading Alliance, which says, let's build the world's #1 social trading community, which is a very familiar sounding tagline. What's that all about?
So these guys reached out to me and said that, why don't you put your profile up and then we'll get you some clients and things like that. I don't think too much about it. I just put it up there and said that, if anyone wants to call me, that's great. Again, I'm dyslexic. So if you write stuff to me, I can miss it out because, again, dyslexia and, I'm just not very good with my words. So I always prefer calls. And I think before the last call recently that I did last week, someone said that, I was hoping to have a bit more FaceTime with you because I thought it was a small session, with all your top copiers or whatever have you. And the only reason I started doing these calls is because of the feedback I received from this one person who reached out to me and said, are people really interested in talking to me about investment? If that's the case, I'm happy to talk to them. I mean, if you invest money with me, it's only right that you have access to me, right? So that's why I put up these two. One is free, one is paid. The free one is, of course, if you copy me with a certain amount. The paid one is if it's below a certain amount, I still want to give you access. But I have to preface this with somebody did reach out to me on Instagram and asked me why their trades aren't closing. And he invested $200 with me. And these are questions I cannot spend my entire time answering. If not, I won't have time for anything else. So that's kind of why I put the paid part there. It's just so that people don't call me up for some kind of rubbish reason.
So I'm trying to understand if this is a separate thing from eToro or part of your service as a PI.
Yeah, pretty much. It is. I mean, if you guys want to have a chat with me for whatever reason, just hit me up. I'm happy to have a chat with you.
Okay, let's talk about your risk score. Is your risk score fair?
Risk score is really a metric. It's a calculation. So if I was unhappy for risk score, that's because my trading sucks. So I'm okay with it. I'm okay with the risk that I take, and I'm gonna live with that.
But we're talking about the eToro risk score in particular, which some people argue isn't a great measure of risk. The one thing I would ask you about, there's a couple of things I'd like to talk to you about in regards to your risk score. One is that you've currently got a 30% cash balance. Now, is that usual? I ask because the obvious effect of having a 30% cash balance is that it keeps your risk score suppressed, makes you much more attractive to copiers. Again, this is the cynic in me. You're about to blow that out of the water with a heartfelt story.
No. So we're recording this on December 20th. I think the markets have not opened yet, but the Omicron virus has brought some fears into the market. The reason why I have so much cash, and I mentioned this during my investor call last week as well, is I think we're too early to decide what Omicron is. I don't know. Is this a repeat of last year where there's going to be shutdowns, we're going to have very high drawdowns? I don't know. And I think we're too early to tell. And conceptually, if we think about where we are sitting today, 2 weeks ago, the S&P was at all-time high, right? We are in COVID, a crisis that's felt around the world. We're having supply chain shocks. A lot of people are out of jobs, and the stock market is at all-time high. That makes no sense to anybody in any situation. If you're an alien coming down from Earth and you saw that, you'd be like, what on earth is going on? This makes no sense whatsoever. So having those views in mind, I hold a lot of cash because I think it's the safest thing to do. If I was, again, an institutional investor, there are various things we can do. We can look at short-dated papers. But on eToro, of course, those instruments are not available to us. So the alternative is to hold cash. And that's what I do. Some people say hold bonds. But if you look at the recent crises, they've all been correlated. So there's no reason to hold bonds, in my opinion. It's not really a good hedge. I have 2 gold stocks in my portfolio that are supposed to be hedges against all this, but they're performing terribly. So is there really a good hedge in this market given the instruments we have on eToro? My answer is I don't feel so. So that's why it's cash. And that's why my risk score, if you like it, is considered low.
So you had a large cash position 2 months ago, 4 months ago? I don't know because I've only just really looked at your portfolio.
Less so. I think I had a few more trades on. I think the last year in March, I was pretty much all in on the market. I had very little cash left. I think I had like 10% at most. Everything else was in different places and I just deployed everything.
Yeah, I watched the Felix Falix video and your response to it, and he was drawing the distinction between your line chart, which showed a huge drawdown in the COVID crash, and then your monthly performances, which didn't. And your answer to that was you had a cash position, you deployed it when things dropped, and then they very quickly turned around. That's why it wasn't reflected in your monthly bar chart, because performance was good.
Kevin, your research is amazing. You know that?
Well, I watch Felix Falix. That's about the extent of it.
I watch him as well. He's fantastic, man.
Okay. Copier numbers and assets under management.
8423. Is that right?
Copier number is 8446. You just mentioned a lower number. Must be hard to keep track since you've been on Editor's Choice.
Yeah, and I must admit, it's very flattering.
Now let me just describe to the listener what the copier graph looks like. It's basically the story of 2 rises. There was a steep rise, bit of a drop off, a plateau, and then another steep rise. Are both those steep rises due to Editor's Choice, or how do you explain them?
Honestly, I don't know. I don't follow it. And I'm being serious here. I don't follow it too much. People ask me all the time, like, how do you get an Editor's Choice? How do you do this? How do you do that? I intentionally don't think about these things because I think it takes away my mind space from focusing on the things that are really important. So if they feature me at Editor's Choice, that's great. It's not intentional that I seek it out, and it's not intentional that I don't seek it out. If it happens, that's great. If it doesn't, I just continue doing what I do. So I really can't explain those two rises.
Well, you know, the second one was definitely Editor's Choice.
Oh yeah, I mean, now that we're here, definitely.
But you don't know that you were on Editor's Choice prior to this?
I'm sure I was at some point, and definitely the only distinct one I remember was 2016, when I really took this kind of full time. Then I remember going at Editor's Choice and celebrating that. But after that, I've really not followed it too much.
Well, your graph is still up and to the right, as you would say, unlike most PIs, which is they reach a peak and then it's a question of a slow decline until something else happens. Also, in your number one reasons copiers won't make money on eToro video, which was February 2018, you stated that your goal was to manage $10,000 for 1,000 people. You far exceeded that. Congratulations.
Thank you very much.
And can we talk about that video for a while?
Absolutely. I love talking about that video, to be honest.
In that video, you say that you did your master's in finance thesis on the traders of eToro.
Exactly, yeah.
And now I have a number of bullet points, if I could just run through them from that video.
Absolutely.
Copying the most popular or best returning PIs is not a winning formula.
Yeah.
So your message is definitely don't copy any Black Star PIs. Listener, take note. Next point, basing a manager's performance on the last 12 months is not a good idea.
Mm-hmm.
In which case you would have maybe one good year in your record, or maybe two, to be fair. You don't like saying leverage, fair enough.
Mm-hmm.
You get annoyed when you see averaging down. Can you elaborate on that a bit? Because to the listener, averaging down might be seen to be something that they've always been taught that they should do.
Right, I understand. Okay, so my master's thesis was really on Forex. So that was the focus. It was on trading Forex versus different managers. So managers on eToro and managers in the mutual fund or hedge fund world. What I found is that a lot of eToro managers, they took a lot of leverage, right? So what happens if the market goes in their favor, they're up 2%, where the index is up 1%. So that just means you're taking more leverage. And that's what I found, more volatile. Second, I found is the danger of leverage is, especially in Forex, you're right until you're not. This is like the analogy that Nassim Taleb gives, which I love, right? It's like a turkey. You feed it 364 days a year. It's fantastic, right? But on Christmas Day, that's it. So a lot of people trade like that. They average. If you look at crypto in 2018, before the big crash, right? What was it? It was people saying, buy now, everything's on sale, buy. It was great until it wasn't. It dropped from 20,000 to 3,000, and a lot of people just lost everything. And I see this time and time again. And I get very annoyed by it because they lack any sense of control. I'm a bit more forgiving if they do it, especially in stocks and less volatile assets. And you have a thesis behind why you're averaging down because you know that at some point it should revert. But in FX, it was a case whereby everyone's just averaging until they just got destroyed. So that's actually why I took a very harsh stance on that, averaging down. So same thing with stocks. I think you can keep averaging down, but you have to have some sort of thesis. When are you wrong? When are you saying that now it's time to throw in the towel? I've risked too much already. Now it's time to get out. A lot of people don't have that sense in their mind. And if they don't have that, you never know when to get out. And that's scary. To me, that's just scary.
Okay, so the conclusions from that video, I think, were really, you were encouraging people to consider other styles other than tech and crypto.
Mm-hmm.
You were questioning the validity of a portfolio construction if there's too much concentration on a, quotes, hot sector.
Mm-hmm.
And Therefore, you prefer macro as a style of trading because it's more open-ended.
Yes.
Flesh that out a bit for us.
Okay, so the macro style, if you look at what Ray Dalio has done, and he's really the forefather, I wouldn't say that, but he was the one who brought it to the most media attention. He has a great video on how the economic machine works, and he has this style called all-weather portfolio. In every cycle of the economy, a certain asset should perform better than other assets. It happens that when I started trading, this was in 2009. This was during the GFC, right? So people are losing a lot of money. And when I saw that, it was basically everybody was into banks. And I saw Citibank drop, I think it was like 90%. And I used to work for Citibank. So if you are so concentrated in one style and you don't have any kind of divergence from it, and you just say whatever's the hot sector, and you didn't catch that properly, you basically would have lost 90% of your portfolio. That's really, really scary. I say this as a cautionary tale just because I think it's very evident that a lot of people are very long tech now. A lot of people have lost a lot of money recently because of the software as a service, especially, has taken a real hit. And these are factors you just cannot control and you cannot time it. People think you can time it, get out when the time is right. No, not really, because all crises are a result of liquidity. So it can drop really fast because of that. My view is that if everybody's invested into one side of the boat, it can create a mispricing. So it's always good to have somebody on the other side just to balance that view out in case something goes wrong. At least you don't lose everything. So I think that's really important in any portfolio construction.
Dear listener, just a little pause here to say a few things directly to you. The calendar is full until the end of the year. That will mean 52 episodes, which seems like a good time to pause and call it Season 1 and take stock. It's been a lot of fun and a lot of time and effort, but I'm pleased to be creating something of value for eToro users, particularly copy traders. Whether there will be a Season 2 depends on a number of factors. I say it elsewhere, but I want to repeat it again here to really encourage a little action from you. If you want to see the podcast continue, you can help by bringing more listeners in. A lot of people still don't know about Copytraders Club, so post about it on your PI's feed in eToro. Mention it on a Facebook group, or in whatever Discord groups you're in. That's not too much of an ask, is it? On the podcast apps, there's always a share function that includes copy link. Use that. Or copy the YouTube channel link and share that. Or share a link to your favorite episode. There are many ways to eat an orange. I also have one of those affiliate links for new eToro signups in every episode's show notes. So, if you know someone interested in signing up, please copy and send them that link and help support the show that way. Now, I know these calls to action that you hear on podcasts can easily be ignored, and I always ignore them myself, let's be honest. But this time, I am asking you, as someone who listens to and enjoys this one-person independent podcast, to make a little effort to help it along. You can even press pause and take 2 minutes to do it right now. If you do, know that I am grateful. If you don't, every time you hear this bit, you will be overcome with a crippling sense of guilt and unworthiness. Until you do. Back to the show. Now let's move on to specifics a little bit. Zech, if we could look at your portfolio.
Sure.
Roughly speaking, of your invested funds, they're allocated stocks 73%, ETFs 15%, crypto 11%, and only 22 positions in total. So that's a pretty concentrated portfolio. 15 stocks, 2 ETFs, 5 cryptos. None of them are Bitcoin, in keeping with your image as a salmon swimming upstream. Also, I note no currency pairs at the moment, although you do at other times, right?
Yes, I did.
So you might be criticized in some quarters for having only 15 stocks. Some would say you're concentrating risk in too few assets. What would your response be to that?
So even within the stocks that I have, sometimes it just themes. Like example, I have 2 gold stocks, but they follow one theme. I don't really understand how people can keep up with like 1,000 positions or even like 100 positions. It's insanity to me. Like, how do you keep up with all this news? So I really write down an idea. So if I hear a really great idea, what I do is I write it down and I say, this is my idea. These are the factors that need to happen if I was wrong. And these are the factors that will tell me if I'm right. And that's it. I don't know how people monitor so many positions because it's tiring managing 20 or 30, and I'm happy with the way that I invest. I think it frees my mind to not have to look at every investor call. And I think that works for me.
So there's not too much desync at the moment, only really in your smaller positions. So it's of less significance. I think you addressed some of this as a result of seeing the Felix Valix video on you, correct?
Oh, yes. Honestly, the desync thing I didn't know too much about it until he brought it up. So I owe him a beer and even more.
Okay, so let's discuss some positions of particular interest. RSX, you mentioned this in your September update video. This is an ETF that you like because of the suppressed PE ratio of the Russian market, even despite the rise in the price of oil, a sector with heavy weighting in this ETF. So you think it's only a matter of time until this imbalance redresses and the RSX price reverts to the mean. Is that correct?
Yep, that's about right.
And what's your timeline on that?
I don't give timelines. I don't think you can time the market. But even if it doesn't revert completely to the mean, at least revert a little bit, I still think there's enough upside for this risk to exist. I am highly aware of all the political tension that's going on though. So it is something that I may be wrong. So I'm keeping a close pulse on that.
You also seem to be keeping a close eye on oil and gas companies. In a contrarian move, it seems almost against the ESG/green movement. Like you said before, if everyone's chasing one football, it creates an opportunity elsewhere.
Exactly.
Now, you used to own Surgut Neftgas and an oil ETF in the past. You now own China Petroleum and Chemical Corporation, aka Sinopec. That's your largest position, in fact, at almost 7.5%. So, you talk about themes. You also have 5 of your 15 stock positions in mining or fossil fuel adjacent companies. So that might not be to everyone's taste.
100%. I love this question because it really talks about the zeitgeist of the market. This is one thing I'm actually really bad at. I think there are many investors who are much better at this. But if you look at the market and where everybody is for green energy. And like you said, it did create an imbalance. If you look at the EU in Europe, right? The only they can't burn coal because it's bad for the environment. So everybody's just going towards natural gas. And natural gas prices are so inflated right now because of this ESG movement. So we have to ask the question, and this is a very pertinent question for everyone. Even I myself, I have a car, and I never buy a new car. So how long is it going to take for me to get an electric vehicle? I think it's going to take me many, many years. How long is it going to take to convert all of the world into electric? really long time. It's not to say electric isn't the future. I'm just saying oil and gas is not worth zero today. That's all I'm saying. We can work towards the future, but it's not worth nothing. I have a position as well in Intel, and I love tech again. So I'm not saying Intel has the best chips. I'm definitely everybody's like, AMD is the best, AMD is the best, AMD is the best. 100% agree with you. But the value of Intel is not zero. That's all. I'm just saying I think we've gone too far on one side of the boat. And because the media loves to hype everything up, there's a media bias there because everybody has a certain zeitgeist. It goes too far in one direction. That's all I'm saying. And that's why I sit on the other side. I recycle like all the time. I believe in, my wife works for a nonprofit. I love all these environmental things and stuff for the community. But we're just too far on one side. That's all I'm saying.
Well, you say you love these environmental things, Zach, but I did a little calculation, adding up China Petroleum, Cameco, Newmont, Barrick, Energy Transfer, and Williams, and we get to 25% of your portfolio.
Mm-hmm.
And if we add in RSX, it's over 30. So that's about 30% in extractive industries, you could say, and 30% in cash. So as you say, your style isn't for everyone.
Yeah, I mean, it's not that I take a contrarian view on intention, or it's not that I'm saying that we shouldn't go to electric vehicles. I'm just saying that let's just not get ahead of ourselves. The market's a little bit excited. It's created a mispricing. If we think about the concept of finance as a whole, it's to allocate capital to the most efficient markets. It's very hard for me to look at a stock that produces electric cars and say that's worth 150 price earnings ratio, but look at oil and gas company and say that's not worth 9. It's impossible. It's too far a gap. It will take a very long time for the world to get there, so it's not worth 0. I do agree that we have to get there one day. I'm just saying that let's just not get ahead of ourselves and say that it's worth nothing. Because capital markets does perform a very important purpose in the world, is to say this is the price that it should be, is to create a transparent value of a marketplace of price. And without this pricing, they are unable to raise funds. We perform a very, very significant role in the way the economy works as investors. We're not like meme stocks just jumping from place to place. This is kind of important. So I just don't want to jump too far on one side. That's all I'm saying.
Okay, well, let me play nice for a second and ask a question that doesn't have any implied criticism. Here's an embarrassingly softball question for you. I think you deserve it, given your responses so far. Okay, Nokia. What are you doing investing in a dead mobile phone company? Surely they can never come back and rival current handphones.
Yeah, no, it's absolutely true. I think even Nokia themselves have sold off their own mobile phone division. So really, I think what we're looking at is in terms of the network capabilities that they are building for different countries. There are only, if I'm not mistaken, and this is based on research that I've heard from somebody else and kind of verify on my own, is there are only 3 players in the market right now, one of which is Huawei. And Huawei is, because of the China tension, a lot of people are saying don't use Huawei. So now you're left with 2 players. So that's a pretty damn good market if you have 2 players and it's just Nokia and I think it's Ericsson.
But players in what area?
So yeah, they're the only players in one of 3 players in the large-scale telecommunications infrastructure.
Not mobile phones.
Not mobile phones. That's
totally different company, in fact, these days.
Pretty much, yeah.
Let's talk about your deposit strategy. You said in a recent video you'd be announcing a new strategy soon. You'd come up with some great revolutionary new idea to add funds that wouldn't inconvenience people. So another Copytraders Club exclusive. You're going to reveal what that is today.
Yes, I am. Okay, so I've had trouble with this because I know depositing annoys people because it's inconvenient. But again, my mission on eToro has always been to align the way that I invest with whoever is investing with me. And I have a problem if, as a Black Star PI, we get 2% AUM minimum. So if I have $10 million, that's $200,000 a year. That's a lot. And I'm internally grateful for that. But what I'm saying is that if I'm investing $80,000, and I've revealed my portfolio quite a few times as well, $75,000 to $80,000, and I'm getting $200,000 a year for doing this, there's a bit of a misalignment there. I don't like that misalignment because it becomes a business, which is the very thing I'm trying to disrupt. So I'm trying to save as much as the PI payments that I'm getting. I'm basically saving like almost half, 3/4 of it. And then I'm going to throw it all back into eToro at one shot. I'm going to try and work with eToro and trying to do it in a way that doesn't annoy investors. But I want to bring it up to at least $250,000 so that people know I'm with you in my investments. And I'm serious about what I'm doing. And even if that causes me to lose a lot of copiers, I'm okay with that result.
Well, if you do it in one hit and you rebalance, you close and reopen, that's going to give you a lot of very positive PR. It is interesting, isn't it, that because the PI information is only proportionate amounts, that you've no idea really how much a PI has unless they tell you. So some could be managing, as you say, millions of dollars and yet be playing with a couple of grand.
Yep, absolutely.
And as you say, that doesn't seem right because then they're not, priority becomes maintaining the PI salary because that's where all the cash is.
Exactly. And those are two things that really grind my gears. One is exactly that. You're like, I remember seeing this one time, like I've gotten to a green star and now I need to top up my account. I was like, what? It's insanity. And the other thing that grinds my gears is just comparing yourself to like Ray Dalio or Warren Buffett and say I did better than them. That's like, oh.
Okay, let's talk about your copiers. What kind of copy trader should copy Zech and what kind shouldn't?
My ideal persona of someone who would copy me is someone who's lost money before. And I say this with all respect because everybody tries to sell you stuff, right? It's like guys with Lamborghinis trying to sell you like, buy my course, buy this, buy that. And I've bought so many of these courses and they're all rubbish. My ideal person is sick of this, is just tired of all this selling and bullshit that's going on. But let's be fair, like I don't think I'm going to get 60% return every year. That's just not practical or feasible. I can only concentrate on the process. I can never guarantee returns. As long as you're sick of it and you're willing to stick with that, I think you're a good copier of mine.
Yeah, I like that you say that actually on your bio. Target returns, none. If I see something good, I buy it. You also say copy stop loss 30% suggested. If I ever get there, there's a problem. Max loss on one thesis, 10% of account. Okay, so that's the kind of copier you're looking for. Someone who likes those kind of answers.
Yeah, exactly.
And who would be the wrong person to copy you?
Crypto bro who thinks I'm gonna 10x every year. I don't buy meme stocks and I'm not into the latest thing. I'm too weird to understand the latest thing. I don't understand things like Nike or Adidas or anything like that. So any consumer brands, I'm out. I'm not the guy for you.
And your most frequently asked question is?
When is a good time to copy you?
Well, that's not what I was looking for. I saw you say somewhere else, your most frequently asked question is, why aren't you investing all the money?
Oh, yes, that's true. Yes.
So somebody who understands your policy of maintaining a cash position.
Yeah, someone who understands that if there's nothing good, there's no sense in chasing returns. I think you mentioned this a lot on your show. If you see a fat pitch, swing it. But if you don't, just wait for the next fat pitch.
have to be careful how you say that. Okay, so what role should you as a PI play in a copier's portfolio? And can you describe what you perceive as the ideal portfolio with you in it?
Yep, so I would have somebody who's very into the trends, who's into something that's hot these days. So if you ever feel like you're missing out, at least you have somebody to do that for you. Bees84 is great at doing that. I think Eloise is great at doing that. I would definitely throw in an Amir Singh because I think he does great work. He's a value investor, but he does great work. You need people like that in your portfolio to balance me out because I'm just weird in everything that I do. I don't think I'm for everybody. That's kind of how I would balance it. If anybody is copying me, is listening to this, first and foremost, I would always tell you, please have your insurance because no matter how much returns I get you, I can never cover for catastrophic events. So insurance is a must-have. Home insurance, health insurance, things like that. I don't know your personal situation, so please talk to somebody in your country who can advise you. And definitely have cash savings because your washing machine is going to spoil at some point and you're going to need cash to kind of tide you over. You may lose your job at any point in your life, and I don't want you stressing about closing your position. So please have some cash on hand as well. Whatever number that may be, and then insurance. And yeah, that's kind of all I wanted to say. Please have those things as well.
Okay, so back to the copier portfolio. How many PIs do you reckon is a good number?
I would think 3 to 4 is kind of a good number to have. I think that would be sufficient, to be honest. You're sufficiently diversified at 3 to 4.
What other PI would you say you know best on a personal level?
Oh, definitely the Singaporean PIs. Yeah, like I said, Simone, Amar, and Steven, I've actually, had quite a few conversations with them. So those are guys I'm closest to. Maverick's based out of Malaysia, so I've never really met him, but those 3 guys definitely met them, and we talk a lot. So those are guys I know personally.
Yeah, I entertain dreams one day of doing a Singapore in-person round table. Wouldn't that be fun?
Oh, it'd be so fun if you could. I think you should join us in our next round table, actually.
Well, in real life, I'm talking more like down Clark Quay or something. Get lots of selfies.
For sure, that'll be fun.
Okay, final question, Zech. Mm-hmm. If you were in my shoes, what question would you have liked to have asked yourself that I didn't?
Okay, I think the number one thing that people would ask me is my outlook for crypto, because I've been very involved in crypto and everybody knows that I've made quite a decent amount of money on crypto. Yeah, crypto is still very early days. I think most people don't really understand it. But it is also, you have to remember, it's also based on nonsensical valuations. So you have to be careful about how you treat crypto in your portfolio. I think you need to have some exposure to it at all times, but just be careful about how much you expose yourself to.
Just to remind the listener, your crypto exposure hovers around the 10% mark.
And my biggest position is Polkadot. Polkadot is a very unique technology, and that's kind of why I'm supporting it. I think it's undervalued mainly because of where Ethereum is valued. Ethereum has a market cap of 400 billion or something. Polkadot is like 20, so it's far less. I'm not saying it should be equal to Ethereum, but what they're doing as a layer 0 technology is extremely interesting. And if anybody has time to look into it, and most tech people I know are very excited about it, that's kind of why I'm supporting Polkadot. Yeah, I heard you ask this question before. What would I recommend to help you improve the podcast? Is it okay if I answer that question?
Fire away.
Gavin's actually a good-looking gentleman. He just never shows his face, and I have no idea why. People would love to know the man behind the voice, so definitely show that, man.
Okay. Well, what I quite like, I like the idea of is when you're just a voice, it allows the listener to create this whole narrative around that voice. And I don't want to disappoint them by presenting the depressing reality.
You definitely won't, man. He's a good-looking gentleman, guys. He's a good-looking gentleman. Guys and gals, sorry.
I'm glad we're ending on a happy note, Zech. After all my skepticism and cynicism towards your bio, it's good to see that we're still on speaking terms.
Good fun, man, Gavin. Thanks so much for having me. Really appreciate it, man.
It's been brilliant to have you, and look forward to keeping an eye on your success as a newly crowned Black Star. Wish you all the very best in the future, and look forward to that drink in Singapore one day.
Absolutely. Sounds good.
The chosen one has spoken. Only the one true stock market genius would deny his genius, right? Well, that's for you to decide, listener. But good luck to Zech. Another example that the eToro PI pool is full of all sorts, and there really is something for everyone. That's all from me. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Yes, this week. You. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. It's just generic chit-chat. We don't know your individual circumstances, etc., and so forth.